Good morning, traders. Sorry about the delay. It is 8:09 a.m. Chicago time on Monday, the 12th of September, 2022. This is episode number 2312. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Sorry about the delay this morning. Some quirky stuff going on here. I want to remind you first and foremost that today is roll day. You have the U.S. indices rolling this morning, or since the open of the session, which is 5 p.m. Central, 6 p.m. Eastern on Sunday. U.S. indices all roll. You see the adjustments in front of you. Also, you can find these on Twitter. I just retweeted these from Convergent. You can also find them at Convergent Trading's Twitter account, twitter.com/conv trading, CONV trading. Highly suggest you follow that. The adjustment for the S&P is a premium of plus 18 and a quarter points. That means all of the prices prior to today, prior to the December contract, going back to infinity in terms of time, have to be adjusted up 18 and a quarter points in order to match the current contract. If you don't do that, you're going to have an 18 and a quarter point gap in your charts, and it is not representing what actually happened. It's simply a roll. The new contract has a much higher premium than the current one. The current one's expiring Friday, which also means that this is rollover week. So the second warning I have for you for today is that it's roll week. Classically, not such a fun week to trade, but also you have to take heed of the fact that volume is going to be impacted heavily by the presence of roll participants, meaning that your volume delta as well as the volume readings, if you use volume for your trading signals, those are going to be slightly off because of the fact that people who are long September and want to carry the position into December have to sell September and buy December. So they're selling the old contract, buying the new one, inverse if short. So just be aware of those things. Here's what we've got in terms of the pre-market summary sheet this morning. Again, a reminder that we're rolling. The market is in a mild risk-on sentiment this morning. We've got a decent push-up in the European markets, pretty strong push, and overall good risk appetite in Europe. Ukraine pushed Russian forces all the way to the border on the east side, I think east-northeast or something like that. And I'm not sure if that's impacting how the Europeans are trading, but obviously, there's a risk of retaliation by the Russians in that case. So that's the big news over the weekend. The dollar is continuing to fall. That is positive for U.S. equities. Here's the dollar. It pushed pretty high. The dollar basket pushed pretty high, went to 110.786. And it's trading at 108.2, so off about $2.5. This, again, is U.S. equity positive. Other than that, not much else to report. We do have some key figures. We did get the GDP number out of Great Britain. GDP month on month came in at 0.2% better than a 0.1 forecast. The prior is negative 0.6. And then this evening, we get the Westpac, Australian Westpac Consumer Confidence, a high tier number at 8:30, expecting 80.5. And then also out of Australia at 9:30 p.m., we get the NAB Business Confidence, expecting 6. Looking at the week ahead, since it's Monday, since it's Monday, looking at the week ahead, tomorrow we get inflation, U.S. inflation. This is highly anticipated by the market. This is going to be a very, very important number that is going to be released at 7:30 at 8:30 Eastern tomorrow. U.S. inflation rate. We also get claimant count out of Great Britain, the unemployment rate out of Great Britain. We get the ZEW economic sentiment number, which is a pretty important figure for the Germans. That wraps up tomorrow. And then on Wednesday, we get inflation out of Great Britain. We get PPI out of the U.S. We get balance trade out of Japan, unemployment rate out of Australia, and the RBA bulletin out of Australia as well. Thursday, we get retail sales and industrial retail sales out of the U.S., industrial production out of China, and on Friday, we get retail sales out of Great Britain, and we get the Michigan sentiment, consumer sentiment number. This is the prelim, which is most likely a market mover. Looking at the S&P, why is our inventory? Let's recalculate our inventory here so we can get it up and going. There it is. The S&P is in balance. We did slightly gap up in the overnight session. We gapped up slightly. We went right back to the prior settlement, which is 40.85, and then we have come out of the prior range, Friday's range. Overall, it is a balanced profile in the S&P. A balanced profile in the S&P, 184,000 contracts traded again. You know, we can't really rely on that number. The inventory is 83% long, meaning 83% of the inventory is above the prior settlement. And then the range is 34.75, which is pretty mediocre. The mode for range is 31 points. So the point of control having shifted to 4104.75 tells us that prices are continuously being accepted higher. There's a lot of talk about how this is a bear market bounce. This is a bear market bounce and so on and so forth. Don't really care. The fact is the market has put in a very, very clear bottom a few days ago or last week. And we could see very clearly that that it is upsetting the buyers and continues to drive. Here's what we've got in terms of where we stand. So this is, we did have one-time framing down on the S&P going back. We broke the one-time framing down. It looked like we're in for a bounce, looked like we're likely to test the prior high and bounce to continue. And we ended up pushing all the way down. This looked very bearish. The next day we came in, opened in range, and closed lower to put in a low. And then this day here surprises by being a trend day up, finishing at the top of the range, and that triggers off. So last Thursday triggered off one-time framing up in the S&P, and then Friday represented a gap with an open at the low end of the range and a close at the high end of the range. As discussed last week, I expect this thing to start making its way back to 41.58 and a quarter is the price in the December contract. Reminder that I'm looking at December prices. I'm trading December's contract. The adjustment is plus 18 and a quarter points. So this used to be 41.40. This chart has clearly not rolled. 41.40. It should be now the number that we're after. The key and most accepted price in this region is 41.58 and a quarter, and that's what we're looking for. That's what we're looking for going forward. Okay, so that's again. I'm going to bring in Thursday, add it to the composite, and you could see that underneath us, there's a ton of support. I think that the way this is positioned, it looks to me like this is not likely to rotate down and break easily. The market has pretty good support under it unless something dramatic happens. The market is saying that we are done to the downside for now, and we have a lot to work on the upside. Lots of single prints, and we work our way up to 41.58, and then we are making our way to the high end of the range, the 43.45 is what I'm thinking. So that's how things are shaping up currently. Looking at the current intraday chart, this is Friday right here. And then we opened, we dipped back down, we tagged the prior settlement, which should be 40. This is what delayed my start. For some reason, the roll didn't take. Apologize for that. 40.85, and then we are holding up steady. So what are we looking at for today in terms of how this thing is likely to trade? Expectations for today. Primary expectation. Expecting an open auction out of range. We've got the mid and VWAP just beneath us. We are on top of the overnight point of control, expecting a choppy open. I'm looking for this thing to push higher immediately. I'm looking for it to fail back, and I'm looking for a gap to settle trade back into Friday's settlement price of 40.85. We're likely to put in a higher high, higher low. I'm expecting Friday to come back and revisit the prior point of control, and then for it to hold steady in here. We're likely to go into a holding pattern ahead of CPI, and the fact that we are going into expiration does not help matters very much, but this is what I'm expecting currently. Secondary scenario, open auction out of range, come back, pull to prior settlement, is attempting to pull it to get below settlement, unable. We got our impulse higher, consolidate back at the open, and then resume the squeeze higher. Remember, 41.58 is the key price above. We're well within range, but it is Monday. It is rollover. I'm not expecting that much range. Maybe we'll get to the 40 or so before we peter out. So this morning, sitting out the first 20 minutes to a half hour, looking to see which side is getting better rotations, and then taking action based on that. I'm just going to sit and wait to see who is dominant, because currently the way the market's positioned is that it is very likely to be choppy this morning, and I'm not interested in sticking my neck out in this chop. So that's where that stands, okay? Again, we are trading and quoting December now, so you should be switching to ESZ2, NQZ2, YMZ2, EMDZ2, RTYZ2, and adjusting the prior prices by plus 18.25 points. Okay. Good luck, and I'll catch you tomorrow morning. Take care.